Good evening, ladies and gentlemen, and warm welcome to this roundtable, Supercharging Credit Access, How Supply Chain Solutions Fuel Business Growth. This event is organized by SME Chamber of India jointly with UB. And as a director of SME Chamber of India, my name is Sakshi Kulkarni. It gives me immense pleasure to stand before you today and address this gathering of esteemed individuals from various sectors of the business world. First and foremost, let me express my gratitude to all of you for joining us here today to discuss a topic of utmost importance: supply chain management and finance for SMEs to mid corporates. My sincere thanks to UB for partnering with SME Chamber for this event. This event serves as a unique platform for us to understand the potentiality and advantages of UB and its platform. I would like to invite Mr. Chandrakant Salunke, who is the founder and president of SME Chamber of India and MEDA, for his welcome address.
Thank you, Sakshi. Good evening, friends. Good evening. आज बहुत थक गया लगता है ऑफिस में. All of you must be understanding or must be some surprise कि इतना छोटा gathering because UB wants to meet and interact with the individual to understand the requirements. Rather, we should give a big hand because UB is putting a lot of efforts. And on behalf of SME Chamber of India and Maharashtra Industry Development Association, we are trying to connect with companies. Those are looking for growth and expansion, and those are looking for particular financial products, financial services, and investment for their business. All of you must be aware that currently our Prime Minister is in USA, and there is a different type of atmosphere created amongst the corporate. So we treat like all SMEs now futures corporate. So we have to look at how we can take advantage of this the emerging business opportunities or emerging activities going on. Just now talking with our esteemed speaker, Mr. Patnaik, about particularly the economic growth of India. I said we should focus on SMEs, we should focus on manufacturing, and we should focus now on the capital market. Because three segments are the main playing main role for economic growth of India. Most of the time I observe that many companies are facing problem while they are looking for a supply chain finance, working capital. There are around 6.33 crore MSMEs in India. Hardly 1,55,000 MSMEs are enjoying the banking facility. बाकी सब कहाँ जाते हैं? So this is the most important question. Always I am talking with the governor of RBI. I am the member of Monetary Policy Review Committee, and every quarter we discuss on how credit flow towards industry, particularly manufacturing industry and SMEs can be enhanced. But there is no answer from them. They said we are working, we are working, we are working. So I want to understand that why this is lacking, why the communication is not there between lenders and lenders and borrowers. So big issues going on. Another point, the borrowers issues and grievances not tackled by the financial institution on time and properly. So many SMEs are becoming now difficult task for getting funding from the banks or financial institution. But nevertheless, UB has taken major initiative, transforming SMEs, transforming companies, and transforming mid corporates to how to channelize the finance and investment from the financial institutions. There are plenty of opportunities out there, but I will speak after the UB presentation because Mr. Patnaik is having their web call and he's got a meeting at 8 o'clock. So I want to invite him to give his thoughts on particularly micro to macro economical growth. What is the initiative and strategy we can think and we can take forward? And I'm sure that all of you must be enjoying this today's evening. It's a small gathering, but it's very important because we have to focus on the requirements. We have to focus on the demand of the industry, and I'm sure that we will take forward. Thank you very much. I invite Mr. Patnaik to deliver his speech.
So, I would like to invite Dr. Tirthankar Patnai. He is a Chief Economist, National Stock Exchange of India Limited, and his topic is India's role in the global economy post-pandemic.
Thank you, Sakshi. Thank you, Mr. Salamke. And it's a pleasure to be here. And I am an economist. My presentation will have a lot of numbers. I hope you are all okay with the numbers. And I'm also not going to speak about what we today know about the economy. So some of the parts that I'm going to talk about in my presentation here will have projections, and these projections kind of tell us the opportunity that India will provide. And we've done, as economists typically do, several scenarios. And I will leave you to judge what scenario we might take, but I will provide some of the numbers in either of the scenarios. So this is the sort of flow of the presentation. We'll talk about a little bit on the global macro scenario. We'll talk about how India's growth is resilient in this current global macro scene, and would the 20s be India's decade? Something that I'll try and answer in the deck today. I'm also going to be talking about some of the themes that are there for our country in this decade: digitization, manufacturing, consumption, and last but not the least, I have to speak about some of the challenges that the Indian economy will face as well. So here it goes. Charts. So I have two panels here in my first slide. I have historical data which shows slowing global growth, and there are two charts on top of the left panel. One is growth in developed markets, and the other is growth in the BRICS economies. And this is a fairly longish chart. It shows you two dips in global GDP growth. One is the global financial crisis, and the other one, as you can see, is as you can make out, is the pandemic. And you notice India also seeing fairly negative numbers, fairly low numbers during the pandemic. But this is how the global scenario has been. On the right side of my slide is the future. This is about how purchasing managers behave over the next 3 months. The PMIs are generally they are diffusion indices. They are basically an idea or a view of what is going to happen, or how people like us in the industry feel about what's going to happen in the next 3 months. So PMI indices, if they are above 50, imply that people are sanguine about the future. PMI is below 50, it imply that people are not so sanguine about the future. Now, last year, just to give you a background, we in January 2022, we were just out of the pandemic, globally speaking. We had a war. Not many of us really expected it. Russia-Ukraine war, which still hasn't ended. There was a significant amount of impact on global commodities. As if that was not enough, all the fiscal and monetary stimuli given by central banks and governments the previous 2 years came home to roost. So you had inflation in developed markets. I'm going to speak about a little bit on developed markets as well. Inflation came over to about 8%. So in my career, I've never expected, and I've been doing this from 2000. I never expected that US inflation will be actually more than India's inflation, but it did. So with that, when central banks raised rates, you would expect industries to go really tepid, the views to go tepid. And notice that in all of the charts on the right panel, be it the US, be it China, Japan, Eurozone, or Germany, the numbers are all below 50. Japan is marginally above 50 at this point, but 2022 was a bad idea. For India, however, all the numbers are above 50. So Indian outlook has remained sanguine over the last year, 2022 to be precise. At the moment, global inflation is easing, as you can see on the right side of the panel. Inflation, the way it had gone up sharply in 2021-22 is now showing signs of a reprieve. But for how long? As you've seen the central bank commentary over the last fortnight, be it RBI or the Fed, they are not out of the woods yet. The Fed did pause, but it did also speak about a hike towards the end of the year as well. So we have to see how long will the global economy survive at this level. I also want to point out one other framework. In this world today, if I divide the world as I did in the earlier slide across developed markets and emerging markets, there are two things. First, who's contributing to growth, and secondly, what is the share of emerging markets that we speak about. So when I again in the late 90s, all of emerging markets, China, India, ASEAN countries at that point, all of Africa, all of LATAM, they all contributed to a grand total of 13% of global economy, just about 13%. The rich world contributed about 87%. That number is being seen as the left panel of my presentation here. Over the last several years, this share has sort of come down. Today, the developed world still commands a reasonably large number, but it's about 57.5%. And the developing world, the emerging world as we know it, that contributes about 40%. Over the next 8 years or so, these numbers are going to converge towards each other. Emerging markets are going to be larger at some point than developed markets. You can see that already in growth over the last several years. The incremental contribution from emerging markets, now I'll come to India, is higher than that of the developed markets. And if you look at growth here, barring India, as this is something that's known to this audience quite clearly, India remains the world's fastest growing large economy. You can see that, you see happening in these numbers. So 2023, thanks to the interest rate hikes that were taken last year, shows lower growth for most countries barring China, because the opening up happened earlier this year. But otherwise, most countries are likely to see lower numbers. Not so in India. I mean, not to that same extent anyway. And the next year, 2024, these are IMF numbers. We are expecting another 6% growth as well. Where will that take us? I'll come to these numbers later. I'm going to now talk about what is India's place in this inimical environment, in a world that's slowing down overall. Look at this. The world last year grew about 3.4%. This year's number is about 2.8, and it will go back to 3% next year. So India is one of the world's fastest growing economies now. And if you look at inflation, which we did speak about earlier, India's inflation is reasonably under control at 4.7%, 4.2 now if you look at the latest numbers. It is in the comfort zone of our central bank. And importantly, how does the world see it, and how does the RBI see it? The RBI says inflation will drop to about a 5% average by the fourth quarter of 24. And if I look at one indicator, one market indicator of what the world perceives is happening with the Indian economy, I will just point to you the FX volatility, not the direction of the rupee. Notice that most of us look at a depreciating currency as something of a worry. If you are exporters, we kind of like it, but more importantly, the idea is to manage the volatility of the currency, as the RBI also points out. As you can see here, the INR's volatility at about 5.4% is amongst the lowest across the emerging market peers that I've shown here. If I look at some more indicators of macro vulnerability, asking how bad could things get. So we do talk about the external account for us. We do talk about crude prices going up and then them hurting the current account deficit. The point I'm trying to make here is that if you look at purely merchandise exports, that doesn't give you the complete story. Kindly include goods and services, and when you do that, you will notice that India's services exports last year were about $254 billion. What's India's crude import bill? It's not here, but that number is about $180 billion. So I just want to leave this number with you, that today we export far more in services than we import in crude. Where does that leave me? Basically, my balance of payment situation is much better than is anticipated. If I look at external debt GDP ratios, we're at 20%. We are higher than China, but if you compare some of the other countries here, we are reasonable. And if you look at the overall liabilities for us, that number for India, people get worried when you have external liabilities, because external liabilities make your country susceptible to vagaries of FX wall, as I just said. If something goes negative in the world, then we have to just remember what happened with peripheral Europe, what happened with Sri Lanka, what happened with Pakistan. So, in India's situation, about 16% of our liabilities were external in 2000. Today, that number is at 5%. So for India, when India borrows, when India has a large debt GDP ratio, it's all in domestic currency, which can be monetized, which can be managed internally without recourse to or without exposing ourselves to the vulnerability of the currency. Further, when you look at internal debt, this debt that we're looking at, 95%, the the maturity profile of that debt is also rising. That gives you, at a fiscal level, far more leverage than you had earlier. And I'm going to now talk about some of the themes. As I said, there are three themes that one would like to focus on: digitization, manufacturing, and consumption. See, importantly, I think telling this audience about India's story, all of us know it quite well. We'll be literally carrying coals to Newcastle, but I'll try and summarize some of the aspects here. So the first one that I want to do is our soft infrastructure push. Now, this is something that has not happened elsewhere. Most of the countries that you think about when you talk about growth, you talk about Korea in the 60s, you talk about the East Asian tigers sometime later, you talk about China after the late 70s when Deng Xiaoping changed the economy's route there. You essentially think about hard infrastructure. You think about hundreds of kilometers of roads. You see about electrification. You look at tall buildings. Those are the indicators of infrastructure for us in general. I'm not saying that's not happening in India, and there are some numbers there as well. I'm talking about what Indians are doing in soft infrastructure, and I'm saying that this has not happened elsewhere in the world yet. And in that, I do not mean emerging markets. I also mean emerging markets and developed markets. So Indians today consume more data than any other country in the world, and you can include China, you can include the United States. It is lower than India. At that point, the digital transactions in India are the highest in the world, far more than developed markets. Aadhaar is the largest biometric mapping in the world, and for proof, regardless of the current questions we are facing on data, COVID actually enabled 2 billion vaccinations. So if you have vaccinations in developed markets, there's no tracking by the government. Here, that number was probably, it was actually possible. And of course, when you look at the social welfare role of the government, the direct benefit transfer scheme for the government of India, it covers 319 schemes. This is some of the things that are happening on India stack, and an enormous amount of infrastructure is now built up on the India stack. Let me just try and show you some numbers here and what I'm actually talking in terms, So UPI, you can see the numbers. You can see the numbers for IMPS, all mobile wireless internet subscriber base. Of course, it's been flat over the last few months or so, but in general, India has been doing what has not been done earlier. It has not been done in any of the developed markets. It has not been done in our neighbor China as well. And and these are things that are showing up in various ways. The implications of these are showing up in various ways. Let me give you an example. So I work at the National Stock Exchange. The total number of investors in India today are about 7.3 crores. What's our population? 1.140 crores. What's our working population? About 60 crores. This is the population between 15 and 60 or 65. How many of us have uniquely identified PAN which have Demat accounts? It's 7.3 crores. And in this number pre-pandemic was about 3 crores. So for the longest time in my career, the total number of people that were invested in markets was about 2%, never went above 2%. This was the case in 2000, this was the case in 2005, 10, 15, all the way till 20, and then things changed. What exactly, what exactly happened? So one of the answers one generally gets is, people were at home and they had no time, and so they started trading in the markets. Yeah, that's not wrong. That's not exactly wrong. But it's not entirely the picture as well. So three things, the confluence of three things actually came together to have this sudden jump in the markets. One of them was access to internet technology, or internet power, which was the cheapest in the world or amongst the cheapest in the world. You can see in my left panel top chart. So Indian internet is amongst the cheapest in the world. Second, the cost of cell phones became lower and lower thanks to economies of scale. 3 years back, India had cell phone imports or electronics imports as one of the top items on its import in its import pie. Today, India is the world's largest exporter of mobile phones. And the third part is Aadhaar. So biometric mapping allows you to do what could not be done earlier, simply could not be conceived earlier. I can tell you, 2010 when Aadhaar, uh, I first heard about it, I would have never guessed that in 10 years it would cross a billion people. No economist at that time did it, and we were already seasoned by then. I mean, what kind of figure do you want to put for something to reach from zero to a billion in 10 years? And yet it has happened. And what we are seeing, what I'm telling you about NSE, is just one of the implications. How much is the headroom? Well, 7.3 crore of us have accounts. I just said, I mean, the working population is 60 crores. If you look at Indians who look at direct markets and indirect markets, the number will be around 15 odd crores. So the headroom is enormous, and these are things that have been only possible thanks to the soft infrastructure that the country has put in. And mind you, a lot of this is policy led, which also, I mean, I'm not the only one who's seeing promise here. The startup ecosystem in India is not rare anymore. I mean, there are unicorns and there are soonicorns. So soon to be unicorns. I have just put up some of the numbers here, some of the brands here. It's enormous. So India's startup ecosystem is amongst the world's biggest at the moment, and it has created enormous amount of value. IT services. See, all of us will have historical numbers here. What I've done is I've tried to see what could be IT services over the next 10 years or so. That's the projection that I was talking about. So IT workforce is likely to improve significantly. IT exports as a share of global exports is likely to rise significantly. CAGR is about 8%. And some of the initiatives that have been taken in this regard, tax cuts, logistic policy, PLI, supply side reforms, asset monetization, Gati Shakti. For the longest time, many of our ministries would work very honestly, but in silos. With plans like Gati Shakti, you have a confluence of action from a policy perspective, which allows industries to work together and bring together economies of scale. And of course, there are several supply side reforms that are also done. Now, in this, I want to speak a little bit about the role of MSMEs. Mr. Salunke spoke about 6.3 crore MSMEs. That's where we start here. So the number of MSMEs is indeed 6.3 crores. The contribution to the country's manufacturing is a third, and thanks to registration, in the Udyam scheme, there are about 9.5 million of them which are already registered. But as one of the things that was mentioned earlier itself, how many of them have access to credit? Not a large fraction at this point. So in all things in India, there is enormous amount of performance that's already been done, and that leaves actually enormous amount of headroom to go further as well. So I can give you some of the ideas here. So that 6.3 crores has been broken up here. So about, if I'm more comfortable in millions, 63 million has about 19 million of them in manufacturing, about 23 million of them, 2.3 crores in trade, and others about 2 crore of them. So the share or the number of people that would be involved in MSME manufacturing today is about 13 crores. It might go to 33 crores by our projections by the end of FY32. Uh, I'll shift this. I'll come to private investments. A lot of us actually talk about what's happening with private investment in the country. So, 8 years back, the big questions that economists would generally get asked is what's happening with India's private corporate capex. This was 2014, 15, 16, all the way. We came close to 2019, and yet the question was what's happening with private corporate capex. Then we had 2 years of the pandemic, and still nothing much had happened. I'm happy to say today, finally, things are turning around, and two reasons. The twin balance sheet crisis seems to be finally over. The leverage that the corporate universe had is coming down, is coming off, and banks have better asset quality today than they had in several years. So that is finally leading to higher and higher share of investment in the economy. You can see this in the third panel, for instance. If you notice that our investment as a share of GDP used to be around 34%, it showed a steady decline because when the twin balance sheet crisis hit us, companies could not borrow anymore, they were over leveraged, and banks couldn't lend anymore because there was bad asset quality. Finally, things are sort of starting to look up. The FY22 numbers show that investment is about 33% of our GDP. Finally, investment is looking up. A large part of it is still being done by the government, but private corporate capex will pick up. So the share of capex from the government's perspective used to be, I know, you can just go back. 10.2 is what was seen in FY09. Just 10% of the government's expenditure was capex. Today it's around 22%. That's a significant improvement in percentage terms. And we see this in the numbers. So about 3 years back, uh, the government was spending around 5 lakh crores or 4 lakh crores actually, then 6.5 lakh crores, then 7.5 lakh crores. This year, the final number is well north of 10 lakh crores. So the capex to GDP trend is also starting to show improvement. And all that capex, why build all that capex? This is the story, the consumption story. So with India, in 2021, there are about 295 million households. What's the population? 1.4 billion, and this comes to about 295 million households. And what I've given here on the left side is a pyramid of how do we stack up these households in terms of income. This is the opportunity actually. So there are a lot of us, 112 million households of us that have per capita income about $0 to $5,000. This is the number. And all the way up to the top, there are only 5.6 million households, just 56 lakh households that have annual income of more than 35,000 US dollars. This is the story that India has today. And over the next 8 years, there's going to be a significant expansion or change of shape in this pyramid. So what will happen in the lowest part of the pyramid will shrink, and what will happen in the top part is something that you can easily see. The opportunity that this provides, I'll just go into the next couple of slides. So we've all heard about the $5 trillion economy. $5 trillion economy seemed like a large enough number several years back. I'm not giving our numbers here. These are IMF numbers. They're fairly conservative numbers. We're looking at about 6.5% real growth. And where does that take us? So it takes us to $5 trillion by 2026. And if you look at, this is of course in nominal terms. I'm just extrapolating it further. By 32, it reaches about $7 trillion. Now, when I say $7 trillion, what does that mean? How can I break it up a little bit? So to show you a little bit of a and the flavor of what such a large economy actually means. First of all, it will become the world's third largest economy. That part all of us are quite well aware of. We keep hearing about it. But that also means that our per capita income at that level, and this is where I'm showing in the bottom chart of my left panel, will start rising. You see, per capita income in the late 80s used to be less than $300. When you have $300 of per capita income, you generally just eat food. You don't do anything else. So you are more interested in what we write as RKM, Roti Kapda Makan. So you generally figure that. Only once your per capita income goes beyond a particular threshold, say 2000 or 2500 US, that's when you start looking at discretionary income. Because you can't eat all your income at that point. So what happens then? This is what happens then. So nominal GDP, current level in lakhs of crores is about 272. It might go to, your guess is as good as mine, 617 lakh crores to about 780 lakh crores. This is the kind of nominal GDP. GDP per capita today is around 2 lakhs, 196,000. That number can go to about, I don't know, 4.5 lakh crores. If I take the middle case scenario here, the tax collections to the government today are about 21 lakh crores. They can go to 60 lakh crores. The amount of exports that we have today, $450 billion, will cross $1 trillion at that point in time. I'm just giving you flavor of what happens with such a large economy. This is an economy which cannot be ignored by any large company in the world. It cannot be ignored by, and we are seeing what's happening, as Mr. Salunki also pointed out. Prime Minister Modi is in the US, and you will see the red carpet welcome there. Again, I'm coming back to RKM a little bit here. So, Roti Kapda Makan today is about 46% of all our spend. That's the non-discretionary spend. We have to spend this. I know in this audience, we are not spending 46% of our food, of our income on roti, kapda. Makan, by the way, is rent. No, we spend far less. But we are not representative of this country. There is a much longer tail in the country, right? Today it's about 46%. That number will go down to just about 44%. I'm being very, very conservative. And if I extrapolate it, I can take it down to 40%. I'm saying even 8 years from now, let us assume that all the consumption that Indians will have, 40% of it goes for the most basic activities, 60% goes for discretionary. So my numbers are fairly conservative. That still gives you a discretionary spend of $2.7 trillion per year by 2032. That's the pie. That's the size of the pie that India will provide to the world. It's not Indians alone. That's the pie that India will provide to the world. My numbers are right in front of here. Smartphone penetration, I mean, it will reach about 96%. That's not a very, very high number, but I'm just trying to give you some numbers here. And with all that, with all the positive picture, it is time to also show you some challenges. First, I mean, we are in the SME. We are in this particular conclave here. I have to talk to you about trade in India. It's all good. If our domestic consumption is large enough, that we'll do quite well. But let me show you the story here. What I've done here is I've taken India's trade and then divided it by global trade. Now these numbers, they will not rise if our exports show positive growth. No, they will only rise if our exports do better than global exports. They will only rise if our imports do better than global imports. So what's happening? I've shown a fairly long chart here. I've shown you numbers from early 70s. For the longest period, all the way till 95, 20, 25 years, India's share of global trade was stagnant. The world did well, we did well. That's it, that's about it. In exports and imports, there was a gap a little bit, but essentially that we were about 0.5% of global trade, which effectively meant we did not have any access to 99.5% of global trade. Then from 95, you see this slight steady rise. You see this rise all the way till about 2012 or so, as you can see in my chart here. This is when we started doing better than the world. In other words, we started doing more business with the world. Our share of global trade in exports and imports started rising. That's the good news. Now, the not so good news. After 2012, this number has remained stagnant. That's my big challenge. Nothing has happened in the last 10 years. We are doing, again, back to as much as the world is doing. So if you want to do better, if you want to get a better share of the global trade, this line has to start moving up again. This is my first challenge. Well, India is doing a lot, as my slide actually tells you. We are having a lot of negotiations to make this change, but this is something that's happening. The other thread that I wanted to point out is, well, an enormous amount of Indians are taking to smartphones. An enormous amount of Indians are using data. We use data like nobody else does, as I mentioned earlier in my deck. But the kind of people who are not touched by this data is also massive in India, thanks to our massive population. So the idea that the internet divide or the digital divide that's there in India is also significant. I'll give you one example here, which is not put up here. So about 40%, this is an overestimate, of our workforce has passed 10 standard. 40% today. At the end of the decade, this number will likely rise to about 60%. 60% of our workforce would have passed 10 standard. 40% would not have done even by the end of 2030. We are talking about technology, we're talking about soft infrastructure, we're talking about a hell of a lot of things that are happening in soft infrastructure, but we'll have about 40% of our population, our workforce, not having passed 10 standard by 2030. That's the divide. It is a challenge. It's a serious challenge. Skills are a serious challenge for the country. And then, of course, climate change. I mean, all of us keep talking about the weather, what's happening with the weather. We notice that climate variability has started increasing significantly. That is something to worry about. It gives you opportunities. It poses poses challenges as well. But some events, this year summer has been very tough. It has been tough so far. The monsoon has been slightly delayed, but these are weather patterns. We're talking about El Nino, we're talking about Indian Ocean diablo, and we're talking several things that will affect us in the short term. We do not consider events which are major, which are larger. I would urge you to think about what happened in Pakistan last year in terms of floods. In a matter of 3 weeks, a large portion of the country got submerged. So when you have climate change, things like that, you will notice that some of the largest companies in the country, when they put out risk, they put out cyber risk, of course, but they also look at climate change. When you talk to governments, one of the things that comes out is climate change. Climate change is the third major challenge that I'll have. But there's a window of opportunity. I want to end on a positive note. There is a window of opportunity. India has a demographic dividend that will continue till 2055. Most major economies do not have it. We had China's population actually coming down by an estimated 850,000 this year. India's population will not see that problem. So we will have a favorable dependency ratio all the way till 2055. The big challenge, of course, is that when you break this down into Indian states, you will notice that this demographic dividend will end much earlier in southern parts of the country. And then, of course, if I extend these numbers, one can go all the way to 20 trillion in 2040. These are numbers by Dr. V. Anand Nageshwaran, our economic advisor, in the mint of last year. So, what's my summary? My summary is that there is an inimical global environment, and the world will actually go worse before it gets better. India is no different. Our problems are both local and global, but our macro fundamentals are in a fairly strong position, as I showed in my presentation here. There are a lot of policy-led, initiatives that's been taken, which enforce financial inclusion, financialization of savings, soft infrastructure, as I put in here, formalization of businesses, and which also allow market mechanisms to work better. So that's going to help us a lot in the decade of the 20s. Our long-term drivers of aggregate consumption, I already pointed out to you what kind of consumption India will actually show to the world. They remain intact, and the India story is also intact. So the India story is not a movie, but it's a 10-season series, and the best parts are yet to come. Thank you.
We have
Send your presentation to us. Yes. So that we have the data in our mind. That would be very happy. Yeah. As long as you say okay, fine, we'll get it.
yeah, definitely we will share with all of you. Yeah. I would like to.
That's something what I can tell you is that I will give you the same answer that the central bank did. The idea is not to talk about a value of the rupee. The idea is to talk about the volatility of the rupee. And rupee's volatility is the lowest, amongst the lowest in the world. So it has been managed well, whatever is the direction. The general direction is that there is a gradual depreciating trend that's there, but the idea is to keep it gradual. So volatility is something that we think about. It's slow. When the rupee transaction will start all over the world. One hopes so. One definitely hopes so. Settlement rupee as a settlement currency is something that we will dearly like, but it takes time. With all the geopolitical shift from the last 30 years, where we had one hegemon in the world, to today, when people think about multiple players in the geopolitical arena, the role of dollar as a settlement currency has not really changed. So any new currency that comes up, there are currencies before us as well. So renminbi is actually also there. So Indian rupee will take some time, in my opinion. It will be on the appreciation side. Hard to say, sir. Really hard to say. And would you want as exporters, rupee to appreciate? I wouldn't know. My sense is, we have to just keep the volatility of the currency low, rather than looking at the depreciation of the currency.
I only wanted to ask one thing. Yuan, the Chinese currency, and
Then
Indian
maybe, yeah,
rupee.
yeah.
How do we fare it in the sense, how fast is the Indian rupee getting accepted world over for trade, and how fast is the yuan? I think they have much faster mechanism to get it accepted across the world.
Sir, I can give you a
Some view on that.
just two numbers. Just two numbers. The yuan is strongly controlled by PBOC, and the People's Bank of China. That's the central bank there. The FX reserves that back the rupee are north of $550 billion. The FX reserves that back the yuan are a multiple of that, much larger. That's one point. The second point is, IMF SDRs, statutory depository rights, which allow, IMF reserves to be also held in other currencies. They have included, the yuan 2 to 3 years back. It will take some time before rupee will be included there. So that kind of gives you the. I hope so, sir, but it will take some time. All right. Thank you.
Final question.
Yes, please.
Global recession is going on because of China, or China is in recession, that's why global recession.
Sir, these are actually difficult questions to answer. See, China contributes to a huge share of global incremental growth. That's point one. But as I mentioned in my deck, thanks to the massive interest rate hikes taken by developed markets last year, sorry. So US rates were near zero for 25 basis points for the longest possible time. Now they're at 5%. So the kind of interest rate hikes that have been taken globally also are leading to slowing down of the large developed markets. So that's also contributing to a recessionary trend. I will not say recession yet because we're not below zero. Global growth is expected to be north of 2% in this year. So we're not at zero yet. Thank you.
You're saying that global growth is at 2%, 3%.
Yeah.
India is 6%, 7%. Then when you are saying that when India grows faster than the world, aren't we growing faster than the world?
Yeah, we are growing faster than the world. In fact, this year India will contribute to 15% of incremental growth. 15%. That's amazing. But what I meant by trade was trade and India growth are two different stories. So our India, when you say India growth, you're also looking at domestic growth in India. And when I'm talking about trade, I'm talking about exports and imports, and then dividing them by global growth in exports and imports. There we are not showing much growth yet.
Yeah, that
We
means
have to do much better there.
we have to increase our exports.
Absolutely, and faster than the global type.
We are becoming more Atmanirbhar.
Partly that is the answer, yes, but if you include exports and imports today, we are touching about 45% of GDP. So one of the answers is clear. We are not as isolated as we are. It's nice to be Atmanirbhar. The idea is to also trade more with the world and be Atmanirbhar. So there is a mix in this thing actually. I have a call. Excuse me. I'm so sorry. Thank you so much. Thank you.
Now I would like to invite Mr. Shagun Jain, Senior VP UB, formerly known as a Trade Avenue, and his topic is traditional supply chain finance models and their limitations, an introduction of technology-driven solutions in the Indian context, and key benefits of technology-driven supply chain finance solutions. Thank you.
Good evening to all of you. It is a pleasure to be here and presenting to you what we think about supply chain finance and what we think about digitization and how we are going about solving this problem of enabling credit flow in the Indian market. So we represent UB, and what is UB? I'll just give you a brief. UB is a platform. It's just like an Amazon or a Flipkart or a Zomato. Okay, what we do is we bring buyers and sellers together. In a sense, from a credit point of view, we bring borrowers and lenders together on the platform. It's a marketplace, right? On one side we have borrowers, on the other side we have lenders. They both come on our marketplace and then they transact with each other. They get to know each other and then they do business with each other. Now, what we have done, briefly, I will tell you over the last 2 years, is we have done 1 lakh crore of debt raise. We have more than 25 types of products on our platform: loans, bonds, supply chain. Then we have collections, we have corpository. I will take you through some of them. And now Today we are doing more than 1 lakh transactions on a daily basis. So this is the extent to which we have grown in the last 2 years. This year alone, we plan to do more than 1 lakh crore of debt raise, which we have done in the last 2.5 years cumulatively. So if you look at the slide carefully, 1 lakh crore of debt raise, yeah. So every month we will be doing around 7,000, 8,000 crores of debt raise in this year. So already in the first 2 months we have done significant amount of debt raise. Debt raise in the sense we help companies raise loans from our platform. So if you look at our if you look at what it means to the marketplace, so there is a central platform. Okay, there are buyers and sellers who register on the platform. Similarly, on our platform, there are lenders who register on our platform, and there are borrowers who register on our platform. So the number of lenders are limited. 250 odd lenders plus now we are opening up the lending space to HNIs and family offices also, and so they have also become lenders on our platform. We don't call them lenders, we call them investors, so they're investors into debt. So we have a specific set of investors and lenders on our platform, and on the other side borrowers, we have more than 3,000 odd borrowers on our platform currently, which includes SMEs, mid-market companies, large corporates. We have all kinds of companies with different rating matrices, like AAA rated companies also there. We have unrated companies also. So they all come together onto the platform and then they start interacting with each other. It's similar to what the Zomato or Flipkart does. On Flipkart, you have thousands of sellers, and then on one side, on the other side, you have millions of customers who go and buy from those thousands of sellers. Similarly, Zomato also, you have thousands of restaurants on one side and you have millions of customers on the other side. This is what we plan to do. We have supply of capital and we have people who want capital. So if you look at this is what we are. It is a credit marketplace essentially. As I said, we have 750 odd investors, banks, fintechs, NBFCs on the other one side. We have 3,000 plus enterprise borrowers. We do essentially three types of products we do. Okay, these are the main products, which are loans, supply chain, and bonds. Now, within loans, you can do short-term loans, long-term loans. You can do bank guarantees. You can do LCs. You can do exports finance. You can do import finance. You can do project loans. In supply chain, you can do vendor finance. You can do dealer finance. You can do purchase bill discounting, etc. In bonds, you have NCDs. You have CPs. You have other covered bonds. MLDs, etc. So these are all the products which are available on these three platforms. So once you register on the top of the marketplace, then you have operating platforms where you can go to each of the platform to take in the kind of the product what you want. Now, why this is happening? Why we came up with this particular concept of creating a marketplace, and what are the problems we are trying to solve? One is the most important thing what we found is there is very limited access to capital. See, there is a company which is sitting here, he might have access to few banks, but he's not having access to 750 lenders on the platform, right? So he might have access to 4 or 5 banks, he might know somebody who is in the vicinity, he might know by his contacts and by his network a few lenders, few banks and a few NBFCs. But what we provide is access to everybody in India. All NBFCs and banks are registered on our platform. So a corporate or a small company gets access to all those lenders. Second, because we have access to very few lenders, the interest rate typically tends to be high. But once you have access to everybody, then there is competition and interest rate starts falling down. Typically, what we are saying is once a company comes on our platform, he definitely sees a fall in interest rates for him anywhere between 100 to 200 basis points immediately. So this has been the journey for many of the companies who have registered on our platform. Third, because we have a limited number of lenders, they don't provide all kinds of products. So most of them have limited set of products. Now, if you want to access a variety of products, there are different kinds of lenders who are providing different kinds of products. So if you have access to 5 lenders, probably you have access to only 10 products, but there are 35 other products available on the platform which are being provided by few other lenders and finances which are not accessible to you, or which you don't know, or which your existing lenders or finances are not providing. So these collateral requirements are one thing which we found that for smaller companies are creating a large problem in terms of accessing credit. So that's why when we came up with the platform, we decided and we thought that if we can get collateral free kind of loans or products which are available through the platform, then the flow of credit will be faster and easier. And that has been truly the case. One more small, is a major problem is lack of credit history also. Now what is happening is a large number of small and medium enterprises, okay, they're partnership firms or sole proprietorships, or they're just converted into a lab, private limited company or LLP. The credit history is simply not there. Now when the credit history is not there, the traditional lenders will never try and solve for their credit problems. You need a different kind of a solution for the places or the problems which arise because there's no credit history. So that's why we have come up with various solutions like cash flow based lending, invoice based lending, which takes care of those credit history requirements which are not there. So this becomes more of a transactional business, but you get your money at least. Now, limited awareness of financing options is what I discussed earlier. Is where our platform has 35 odd credit products, but you might be knowing only about 4 or 5 credit products because you have been given only those products where existing lenders. So there is obviously a lack of awareness and there is lack of access also. Last but most important is the time taken to get you the money. Now all of you know that dealing with bank and getting a proposal done takes a hell of a lot of a time. It takes 2 to 3 months to at least get a proposal passed. The banks will ask you n number of documents, the banks will ask you n number of data, and by the time the proposal gets approved, 2 3 months have gone by, and the major critical requirement when the money is needed would also have gone by. So what we have done is, because it's a marketplace and there are 3 or 4 lenders competing with each other, obviously there is a fear of missing out which is created, and we have seen the sanctions happening much faster on our platform. So what happens is the lenders also work on speed now because they know that if they don't work here, they will lose the deal. But that is not the case when you do bilateral arrangements. You discuss bilaterally with the lender. They take their own sweet time, and there's no fear of losing a transaction, which is so much here on the platform because there are 4 or 5 others also who are looking at a particular transaction. So this is one of the most important things: is the speed of delivery of money has increased dramatically once you start doing business through the platform. Now I run the supply chain business here. Supply chain business essentially means vendors and dealer financing for corporates. So what we essentially do here is, if there is a corporate, we try to finance his suppliers and we try to finance the corporates buyers, which includes dealers, distributors, and OEMs who buy from those large corporates. I will explain to you what all we do, in terms of the products which are available on the platform, what is the kind of platform we have built, and what can you expect out of the platform. So it's a fully digital platform, point number one. For a supply chain business, which essentially means giving money to SMEs, small and medium enterprises, who are a very important part for our business. We have around 20 odd investors currently who are operating on this platform. This is only the supply chain platform. The other 750 odd investors are there on the marketplace, so they can operate in one platform or many platforms. But currently, for our supply chain business, we have around 20 odd lenders who are operating. There are more than 100 large companies on our platform, anchor corporates. They have covered over 12 sectors. We have 1,000 vendors and dealers of those corporates registered on our platform. They are operating on our platform. We have disbursed more than 3,500 crores over the last year. We also have all kinds of companies, AAA rated companies to unrated companies on our platform, who are enabling finance for the suppliers and the customers. Now, the kind of products what we do is, we do vendor finance, we do dealer finance, we do sales invoice discounting, we do purchase invoice financing. Now we are just starting factoring, and we are also starting tier 2 dealer finance. There's the first tier of dealer distributor finance, and then there's a second leg of smaller distributors, smaller dealers, smaller retailers. This is where we are also starting now. Besides this, what we do, how the stack is built up, is completely digital. End-to-end process is digital. We onboard customers digitally. We get all the documents digitally. Then we do Aadhaar-based, authentication for getting the KYC. We also, get some of the bank account statements, the GST returns, digitally through our platform. We help in underwriting digitally by the lenders. So what it does is, it gives us an end-to-end digital journey. it is very quick, it is very fast. We have now had cases where we have turned around and given sanctions to companies within 7 days time as well. Okay, from the first day when the case was logged into us, within 7 days we have disbursed money to our clients through our platform. So essentially, what this is doing is, because of purely digital process and everything coming through the platform, things have moved very very fast for all of us, for the lenders, for the borrowers, and for the platform as well. Now, we are trying to give different kinds of solutions. Primarily, it's an off-balance sheet solution for large corporates, but that doesn't mean that we will not do business with smaller ones. We have started doing business with smaller corporates also. SMEs are essentially the ecosystem of this larger and smaller corporates. I'll just take you through a small video which will give you more gist of what we're doing.
Meet Mohit from Future Motors, leaders in automobile manufacturing. Four brand new cars roll out of Future's assembly line every minute, for which Mohit's role as procurement head is critical. Future has a massive supply chain network. Mohit and team have to ensure that the 1,000 plus components that go into Future's cars arrive on time every time from their extensive supplier network. Then there is Riyaz, the sales head, whose sole focus is to ensure that Future's dealers are buying and selling more. On the other hand, Monica, Future's CFO, has the challenging task of managing working capital requirements of Future Motors and keeping debt levels under control. To optimize working capital, Monica expects a 60 to 120 days credit period from suppliers who need money on day one. Monica also expects that dealers pay upfront for delivery of Future's cars. This could potentially strain the relationship between Future and its suppliers and dealers. How can Future balance its own working capital needs with the needs of its suppliers and dealers so they work on their own network? And the UV Flow, the most flexible and advanced supply chain finance platform for corporates covering various sectors across credit ratings. The platform's guiding principle is that supply chains are heterogeneous, and therefore capital needs to be aligned at every risk and price point from multiple financial institutions. A dedicated relationship manager helps onboard Future Motors on its platform with simple and efficient manner. Subsequently, Future creates a vendor finance and dealer finance program on the platform specifying a few parameters. Now UPFlow's AI matchmaking engine gets to work. It ensures the Future's supply chain finance program is visible to the right financial institutions from among its vast pool. Rohit and Monica are spared the effort of chasing multiple financial institutions to find the right department. They receive effective proposals with desired terms. They serve clients and right partners in no time and others. Future's program can go live. In just a few days, one of Future's suppliers start uploading invoices on the platform, which are automatically processed, and in less than 24 hours, we receive their due payments. On the other hand, dealers start placing more orders with Future, and Future gets its sales received on day one. Future Motors, their suppliers, and dealers are delighted as both of them get an injection of working capital in no time and without any hassle. Even flows back with automated invoice processing and customized dashboard visibility for points, and Riyadh and Monica strengthen their relationship with suppliers and dealers by freeing up their time to focus on other important matters. Since Future is able to negotiate better interest rates, they pass on some of its benefits to their partners. With UBQ's supply chain finance solution, Future Motors not only solves its working capital requirements, but also gets many other benefits. It ends up deleveraging its balance sheet, extending days payable outstanding, reducing days sales outstanding, improving its rating, improving its profit margins, increasing sales, and attracting the best suppliers and dealers. UV flow, cash flow optimized.
What are we trying to do here? The market is inefficient. We all know it. That is why the rate of interest is high, the delivery of credit is slow, the documentation requirement is high, the collateral requirement is high. So what we're trying to do is we're trying to solve this. And secondly, the right kind of lenders are not reaching the right kind of borrowers. So that is also what we are trying to do. Now, what generally happens is when you speak to one lender, you're having one-to-one conversation. He is not able to solve all your problems. So what we do is we bring in multiple lenders to solve a company's problems. His supply chain ecosystem will have different kinds of suppliers, different kinds of dealers and distributors. So some might be big, some might be small, some might be in tier one cities, some might be in tier four cities. Some might have a very good credit history, good CIBIL score. Some might have a very bad CIBIL score also. So what we do is we bring in multiple lenders who will be willing to take risk at multiple risk points. Somebody will do tier one city kind of customer, somebody will do tier four city kind of customer, somebody will do large customers, somebody will do small customers. So from a marketplace point of view, what we do is for any company we bring 3 or 4 lenders who will be able to solve the company's problems. So this is what we are doing. This is the inefficiency which is there in the market, and we are trying to reduce this. This will ensure that the right set of lenders reach the right set of borrowers. Now, what happens once you take a supply chain solution? It helps you to free up your working capital. So we provide additional working capital through the platform. Your existing business where your working capital is tied up in your for your purchases and for your sales, that can be freed up to do more business. You can increase your sales by using our dealer finance, distributor finance, and receivable solutions. It helps you to do more business. And also what will happen is once this financing solution is there, you can cover your entire network as well. So what happens is once you cover your entire network, then once the entire network comes in, obviously the network effect starts playing in, and most of them start taking in the financing options which are available from the platform. It has a domino effect by increasing your sales. For example, I'll give you a small anecdote. We started business with Vedanta Group around 2 years back, and we have underwritten a large amount for them. We were just analyzing today with them in terms of what is the amount of sales which we have delivered. We figured out that 3% of Vedanta's annual sales has run through our platform, which we have helped them generate more. 3% on 70,000 crores is 2,100 crores. So that means we have helped them do additional business of 2,100 crores in the last 2 years through the platform. So 3% might be a small number, but when you look at it into actual figures, those are pretty large numbers for anyone, right? So how will it help the anchor corporates? Now, if there's a corporate who comes on my platform and says, okay, I want your help, how can I help him, or how is it beneficial for him? One is it deleverages the balance sheet. Okay, because the lender comes in, it helps them to reduce the debt on their books by shifting a lot of debt to the dealers and distributors and the suppliers as well, the smaller ones. So they don't have loans, they might take loans and they might borrow and they might get money at a much better rate and much faster. This will help the corporate to deleverage his balance sheet. Second is the corporates now get an extended credit term from the lenders. Today they have to figure out sources of capital to pay money to the suppliers. Once the lender comes in, then they will have enough time. They can take an extended credit period in terms of making payments. Third is if they have additional source of capital, they can negotiate better with their suppliers. They can get cash discounts from the suppliers. The suppliers obviously will get money upfront, which they're anyways willing to give some amount of discount for getting early payments. It reduces the risk also, because the risk in this business gets shifted to the lenders now. Suppose you are having a dealer distributor network and you're having a credit period, the risk is entirely on you for your dealer distributors. But once the lender comes in, the lender assumes the risk. You get the money upfront, and the lender carries the risk for your supply chain ecosystem now. It helps you to increase the sales. It also helps you to build strategic relationship with the partners, because once a supply chain finance program is there, then the partners will start working with you exclusively, or they will work with you much more because they get the money faster through working with you under this program. So these are the key benefits which come for corporates who avail of supply chain finance, both on the vendor side and the customer side. If you look at this, the green ones are the dealer distributor or the customer side, and the red ones are the ones which are there on the vendor side. Now, from a platform point of view, we cover all industries. We cover automobile, white goods. We cover agriculture also. We do metals and mining. From a rating point of view, we do unrated companies all the way to AAA rated companies, because we have all lenders in India. They are banking someone or the other, right? So there will be cooperative banks will bank unrated companies. There will be small finance banks will bank unrated companies. The NBFCs will bank triple B rated, A rated companies, and there are banks will bank a wide variety of customers. So we have all of them on our platform. So it is highly possible that when you come on our platform, you will not go back unfulfilled. Someone or the other will give you money through our platform. It's as simple as that, which I explained to you earlier. You get a large choice of lenders, you get a better interest rate or the lowest interest rate in the market. The money is faster. There's hassle-free process because we help in getting all the data from you to all the lenders. There's complete transparency because when we get you on the platform, the commercial arrangement between the platform and the corporate is fixed upfront. So there's nothing else happens beyond that, and you get a wide variety of lenders, and you pick and choose, and you decide to do a transaction or not. And we are a single point of contact for all multiple banks. So you deal with us, and we deal with all the banks. So you don't need to deal with different sets of people. So as you can see, you have banks like HDFC, Kotak. Then you have NBFCs like Bajaj Finserv, Hero Fincorp, Tata Capital. They're all there on our platform, and they all help us do business for the supply chain finance.
I want to ask you one thing.
Yeah.
All these fellows, they borrow money currently, Bajaj Finance and all that. They borrow money at 7.5%.
Correct.
Now, how is it that possible for them to give it at a lower rate of interest?
They don't give money at a lower rate of interest than what they borrow. What they do is they borrow money from different sources, and they give out money. In some places they give out at a very less margin. In some places they give out at a large margin.
They leverage their.
So what they do is they look at a portfolio. What is the weighted average return on their capital? So what will happen is, if there's a corporate, Bajaj Finance will do business at 9% also. But if there's a personal loan, he will do at 11-12%. If there's a consumer loan, he will do at 13-14%. He will see his portfolio on a weighted average basis. What is the yield on his portfolio? Similarly, when he's borrowing, he will not do like to like. He will see what is the weighted average cost of borrowing. He'll borrow from banks, he'll borrow from retail people like you and me, because Bajaj Finance के भी FD आते हैं, you can NCD आते हैं, you can deposit money there. So they do a weighted average calculation, and that is how the margins get calculated. Understood, no? So it is never a one-to-one situation. He's borrowing at this rate and he will lend at that rate. That doesn't happen.
He borrows, he takes money at a rate, whatever rate best he can.
Yeah.
Then when it comes to giving, he gives it at the best possible rate.
Yes, absolutely. He maintains.
The risk involved.
Yeah, so all lenders maintain a margin at which they want to do the business. So some will, for name, it's called name lending. To get a good name, they will do at a lower rate, which they will compensate by doing that much or double the business with some other people, where they will earn much more. That's how the business heads in these places manage. At the risk, they quantify the risk, and based on the risk, they price the risk. Yes, they price the risk accordingly. So how it works at our platform is, you come, you register on our platform, you can create a program. You want a vendor finance or a dealer finance program, you complete a profile. Post that, you get, or the day you do this, immediately on the same day or the next day, you get interest from multiple lenders. You can choose to work with a few lenders, you can choose to work with all of them, you can choose to work with only one of them also. It is your choice. Once you accept the expression of interest from any particular lender, then the lender and you get talking to each other through the platform. We get a term sheet issued from the platform. Once you accept the term sheet and the negotiations are done in terms of sanction, Then documentation is done with the lender and with the corporate, and post that then you can invite your vendors and dealers onto the platform. Once the invitation is done, then our team takes over and then we help underwrite the vendors and dealers and all your customers, and then we go live on the platform. So once a few transactions happen on the platform, the network effect takes place. There's a feedback loop which happens. One customer will go and tell the others will go and tell everybody else. We do a lot of activities. We do marketing activities within the company also. We do webinars for the entire sales team. We do webinars for the dealers and distributors. We do flyers. We do digital marketing. We do calling. We do WhatsApp marketing. We do all that to make everybody aware of what happens on the platform, what is the product, what is the solution we have offered, and this helps in building scale. And it helps not only us, it helps the corporate also in terms of getting more and more partners onto the platform. So I will just, there are 2 or 3 case studies, I'll email them to you, but I'll just help you take you through one case study what we are doing. There's a B2B marketing manufacturing marketplace, okay, where he takes an order from large customers and then he places orders with small manufacturers. So what this company does is he will say that okay, I have taken order of 50,000 pieces of jeans from, for example, from Mintra. Now he has to deliver 50,000 pieces of jeans to Mintra. What he will do is he will go and select 10 vendors, 2 in Tirupur, 2 in Ludhiana, 2 in some other place. Okay, so he will distribute the order between 10 manufacturers. He will give 5,000, 5,000, 5,000 pieces of jeans order to 10 of them. And now, this to optimize his working capital, he needs to give money to the vendors upfront, because he will get money from Mintra only once it delivers the jeans to them. He's not going to get any advance from them. He's got a large order. Now, if he has to deliver the order, he has to give some money to the vendors. Now, this is where supply chain finance comes in. All the vendors, he comes to my marketplace here, he registers himself as an anchor. He tells me that okay, I need vendor finance for my 10 suppliers who are going to supply jeans to me. We underwrite and then we give them a facility, and as soon as he raises purchase order on his suppliers, we give money to the vendors. The vendors, the 10 manufacturers, the small manufacturers, will then start manufacturing jeans and will supply to him. So if it is within a period of 60 days, he gets the delivery of these goods in 60 days. The goods are directly delivered to Mintra's office. It's a bill to ship to kind of a model, and Mintra then after 30 days makes the payment to this company, and that entire cycle is, for example, 90 days. Then Mintra, once he gets the money, so this company, when it gets the money from Mintra, it repays the lenders. So what happens is, right now the company has an order, it is placing subcontracts to 10 other manufacturers, but it doesn't have the money. So we come into place in between.
Able to still trade without money.
Yes. So he will put in some amount of equity. If there's a requirement of 50 crores, he will put in 10 crores of equity, but he will get 40 crores of debt from the lenders. And then he will send the money to all those 10 vendors. They manufacture, they deliver the goods, and once the goods are delivered to Mintra, Mintra will make the payment, and then the repayment happens.
Then whatever money is given to the vendors will be adjusted.
Yeah, it will be adjusted because the corporate pays the money to us, to the lender essentially. So this is what is shown in this chart. There's a vendor, there's a lender, and there's an anchor or corporate. So once the order is placed by the anchor corporate on the vendors, the vendor gets the money to make the order and deliver the order. Once the delivery of the order is done, then the anchor corporate will then get the money from his customer. Once he gets his money from his customer, and then he makes the payment to the lenders. So this, what it does is essentially what it is happening is, there is financing happening, but financing is happening to the vendors of this corporate. So there is capital which is going and which has helped him to do this business of 50,000 pairs of jeans which had to be supplied to Mintra. Otherwise, what would have happened? He would have had to arrange money from somewhere else and or put his own money, which would have been a very difficult task. You understood? Any questions on this? So I'll also, that was on the vendor side. This is more on the dealer distributor side. So what is happening is, when you have dealers and distributors, you supply goods to your dealers and distributors who further sell it. So there are two models essentially. If the brand is very strong, if it is a Hindustan Unilever or a Procter and Gamble, it is a cash and carry. You make the payment, you take the goods. Okay. In those scenarios, what happens is we help by giving additional credit facility to the customers. You are buying 5 lakh worth of goods today, I will give you additional 5 lakh, so you can start buying 10 lakh worth of goods. You don't have money to buy the goods, we give you additional money to buy goods. The second situation is not so very strong brands, okay, which are medium brands who don't command the pricing power or the sales power in the market. They sell on credit, 30-day credit, 60-day credit, polycab. There's a tubelet of polycab. They don't command that kind of, in the market. So the dealers and distributors will say, okay, I will buy it at a 30-day credit or a 60-day credit. In that case, what we do is we help corporates by underwriting the dealers and distributors, and the corporate will give some cash discount for early payment. So the dealer will take money from the bank and make early payment to Polycab, and they get a cash discount. So this helps Polycab increases business also, and this helps the dealers and distributors avail of additional finance. Also, they make some margin out of it. Polycab will give a discount of 2% on a monthly basis. That translates into 24% annually. They will borrow from the platform at 12-13%. So they make their additional spread of 10-12% also. So this helps the dealers and distributors in two ways. One is make additional money by leveraging capital. Second is they get additional money to do additional business. So these are two ways by which how all these kind of companies operate.
Essentially means that you are providing finance to a person who has got a what do you say ability of entrepreneur ability.
Yeah, of course,
That's the,
of course, of course. See, what happens
so
is,
that he can trade
yes,
or do entrepreneurship more and more without really bothering about money.
correct. So what happens is when we get the financials of anybody, any company, we see how fast the business is churning. If the business is churning fast, then obviously the idea is to give him more money so that he can do more business. So if the business cycle is longer, then the banks are a little cautious in giving money also. So if the cycle is 30 days, he will have more lenders who will give him money. If the cycle is 90 days, he will have less lenders. If the cycle is 180 days, he will have only one lender who will give money. It is as simple as that. The lenders, all lenders, they love churning of business. जितना ज्यादा churn होएगा उतना ज्यादा अच्छा है lender के लिए, because he knows that money is rotating in the business. If the money is stuck, then there's a problem for the lender.
Is there any restriction on the amount, or is there any collateral?
So, I'll just come to that question. So these are some of the corporates who are with us currently in the last 1.5 years. We have Vedanta, we have TVS, we have JSW Group, Civex. All these guys are there. So we have now more than 100 corporates who are operating on the platform right now, who are availing all kinds of solutions, dealer distributor solutions, vendor finance solutions, etc. We are giving prepayment solutions also, purchase order financing, and we are giving invoice-based products also. So, anyways, to your question as to it's collateral free or limit, now it depends on what kind of business you do. We have had cases where we are doing up to 5 lakh also, and without any collateral also. We have had cases we are going up to 20 crores also without any collateral. So, all possibilities are there on the platform.
So essentially, the risk goes from the buyer and the seller
To the lender.
to the lender.
Yeah. The idea is, we've seen the presentation of Mr. Patnaik also before, and Mr. Salanka also has told us that the penetration of credit is far less. Everybody wants to penetrate and be able to give money. Now, what we're doing is we're facilitating that by bringing more and more SMEs into the formal credit network. What this is happening is, if in the informal credit network, the minimum price at which the borrower is anywhere between 18 to 24%, right? 1.5 2% के नीचे तो मिलता ही नहीं है पैसा if you are borrowing on an ongoing basis. Okay, we can remove those situations where there's huge liquidity in the market, the rate comes down to 80 paisa, 90 paisa, or 1 rupee. But on an average basis, for a business point of view, they are borrowing rates are higher. Our idea is, if we get them into the formal credit mechanism, the borrowing rates will fall for them. and they get the advantage also in the numbers, because once they start bringing all this into books, okay, interest as an expenses expensed out from your income also, right? You don't pay taxes on that also. So all those things continue to start happening then. So this is very, very advantageous to smaller enterprises who want to enter into the formal credit network.
Regarding default rates, so who's supposed to pay if your vendor defaults or your dealer defaults? Is it based on the anchor?
Yeah, yeah, it depends on what kind of arrangement anchor has with the lender. There are most of the cases are without any recourse to the anchor, so the lender will try and ensure that he gets the money from the dealer distributor itself. In some cases, there is anchor support available. He says, okay, 5% I will take, 10% I will take. So that is also there. But more than 90% of the programs are like, they don't touch the main counterparty. The borrower has the responsibility to pay. If he doesn't pay, then he gets into trouble. There are only very few cases, less than 10% only, when there is some support from somewhere else.
But what's the mechanism you have that the borrower has not paid to the lender?
So we don't do this collections business. We have a separate company, collections company called Spoctor, which does this business. But it is lender's responsibility to collect the money from the borrower. We help by talking to the borrower.
So
By
there are 60 borrowers who will borrow and then turn up around say we can't pay.
so we do the credit history.
That kind of thing.
Yeah, we do credit history check also. So if there are old guys who are defaulters, we don't give them money. But if there's a new guy who has become like that, then you have no choice. You have to deal with him then.
You have to check and balance.
Yeah, yeah, we do. Yeah.
What is the period you offer?
So our lenders are offering up to 120 days of credit right now on a short-term product.
So for agriculture product, normally they look for 6 months.
Yeah, yeah, agriculture product is for 180 days. So only for the agriculture product, and more so agriculture is now based on the cash flow of the business, because वो subsidy आता है and benefits come from the government. So we have to time it accordingly. So there are only a couple of lenders who are doing it right now. They're timing it based on when the subsidy comes from the government or when the benefits get transferred from the government. But yes, in agri business, we have seen that the tenure is little longer.
You also cover exports or just local?
We have just started covering exports and imports also. We have just started doing business because we are setting up an office outside India to get more overseas investors. So export financing can be done by investors or lenders who are sitting outside India. The existing set of lenders we are not touching currently in India because it's primarily done by banks.
Thank you.
Thank you. Thank you so much. I am around here. We can have a one-on-one chat also. Yeah.
I think we should call UB like a UB is a your banking service influencer. Am I right? So let's give a big hand to Mr. Jain. He has given a very good information. Rather, it's a need of hour. Particularly, I observe that many industries, many businesses face a problem when they go to the any lender. So let us have an open discussion now. And I want to understand because why we have gathered a small group to understand your views about current business scenario, because I am representing chamber and representing large number of members from the manufacturing industry. This is not only in a lender's perspective, but to create some regulatory or some ecosystem, and also we want to suggest the banking sector or the government departments or particular corporates. You must be aware that there is a SME stock exchange which is advocated by me. A lot of SMEs are facing problem to get trade receivable on time. So I insist the RBI to bring the trades platform during the Raghuram Rajan's tenure. And after that, around 97, someone has asked about a collateral fee loan. I was an advisory board member of SIDBI, and that time I said, there is no collateral fee loan for small entrepreneurs or those who want to start a business. That time we have initiated for 25 lakhs. After it become 50 lakhs. After that become 1 crore. And when Mr. Modi has done demonetization, then we had achieved 2 crore. And recently we have pursued through Mr. Modi, it has become now 5 crore. So 5 crore collateral free loan is available from the PSB bank and private bank also. You can take advantage of that. Mostly, Mr. Jain asked about, I think someone has said also, the background check. How many SMEs, how many entrepreneurs sitting here, they are aware about difference between credibility and creditworthiness? Anybody can tell? Credibility is the intention. Intention. And what is the credit worthiness? Bank balance. Bank balance. So what bank is looking nowadays? Credit worthiness? Both. When Mr. Jain has given a presentation, you observe that there is a lacking amongst industry, particularly entrepreneurs, that how to improve the credibility. Because when you deal with the buyers, suppliers, manufacturers, service providers, or any strategic partner, you have to create and develop your credibility. You know that in a two-page our balance sheet, the banks are deciding our whole life of that business. In 90 days, if you cross 90 days and if you will not pay the installment or if you will not pay the interest, you become NPA. So that means your value, business value is up to 90 days only. Our credibility in the market, our credit worthiness is 90 days only. And but like a Vijay Mallya and some large corporates, they are not paying industries or particular suppliers 180 days or 6 months, more than that also. So that time they are not realizing. Therefore, we have brought one ecosystem that called SME Credit Check Private Limited Company. Through that, we have started, giving services to assessment, credit worthiness, and credibility check. This is one. Second thing, to create or to provide a valuation reports. Most of the SMEs and most of the companies are not understanding. They look at only the turnover, but the valuation report is most important. Analytical reports, particularly the companies, when bank or any company looking at you for a particular potential partner, a potential investor, or potential strategic supplier, that time they realize that the company की capacity कितनी है. So properly, particularly this in lenders perspective, they are not visiting the companies. तो हमारे एंटरप्रेन्योर्स की वो क्रेडिबिलिटी जीरो कर देते हैं कि आपके पास क्या है. तो इसके लिए हमने क्या किया है कि इन्वेस्टिगेशन ऑफ द कंपनी और प्रॉपरली व्हाट दे आर डूइंग, इम्प्रूवमेंट ऑफ द मैनेजमेंट इकोसिस्टम. मैनेजमेंट बोर्ड की क्या कैपेसिटी है, क्या नॉलेज है, उसका बैकग्राउंड क्या है, कौन कौन उनके ऊपर सलाहकार है, जो अच्छे एडवाइजर है, ये भी लाना बहुत जरूरी है. क्योंकि बैंक के पास आज पैसा बहुत पड़ा है और यू भी बहुत कोशिश कर रही है कि आप लोगों को पैसा चैनलाइज करे या ट्रांसफॉर्म करे. बट द पॉइंट क्या है कि हमारे एंटरप्रेन्योर्स फेल कहाँ होते हैं? प्रिपरेशन, viable documents, viable project report, properly cash flow reports. There we are facing problem. So that's why we are now creating this kind of program. We are organizing the program, create awareness. आप अंतरप्रेन्योर, आपके पास दिमाग में कम से कम 150 काम होते हैं. एक अंतरप्रेन्योर प्लेइंग रोल फॉर मोर देन 45 एक्ट पर डे. तो हम कितने हमारे अकाउंटेंट या फाइनेंस के ऊपर डिपेंड रहे. तो इसमें क्या बहुत सारे ऐसे इश्यूज आते हैं, बहुत सारे ऐसे पैरामीटर्स है जिसको इम्प्रूव करने की बहुत जरूरत है. आज अगर भारत देश में देखो, हमारी तरफ देखा जाता है खाली एम्प्लॉयमेंट जनरेशन की तरफ. कोई भी पॉलिटिशियन कहता है कि आज हमें 5 लाख एम्प्लॉयमेंट जनरेट करना. अरे तुम क्या घर से करोगे क्या? हम करने वाले हैं. हमें पहले लेवल प्लेइंग फील्ड दीजिए ना. आज बताइए, एक फैक्ट्री चलाने के लिए आपको कितनी दिक्कतें आती है, कितने इश्यूज आते हैं. आज अगर आप पता नहीं, महाराष्ट्र में जिसकी मैन्युफैक्चरिंग यूनिट हो, आपको माथाड़ी कामगार का भी आपको हैरासमेंट होता है, लोडिंग अनलोडिंग का भी हैरासमेंट होता है, और सप्लायर्स का भी इशू है. कोई पॉलिटिकल पर्सन वो भी आपको आके पैसा मांग लेता है, हमें डोनेशन दीजिए, या लेबर यूनियन वाला भी आके करता है. समटाइम्स दी कॉम्पिटिटर्स क्रिएट प्रॉब्लम. आज आपके कॉम्पिटिटर्स भी हो जो सप्लायर्स को भी ले जाते हैं, बायर्स को भी ले जाते हैं. ऐसे बहुत सारे इश्यूज है. So particularly, even you have shown, Mr. Jain, about supply chain and marketing ecosystem. That is also most important. आज अगर हमें हमारा कस्टमर को रिटेन करने के लिए हमें बहुत कोशिश करने की जरूरत है। कस्टमर रिटेन होता है तो डेफिनेटली, आज कितने कॉर्पोरेट्स मैंने ऐसे देखे, उनके पास सेकंड सप्लाई के बाद कस्टमर नहीं रुकता है। उसके कारण बहुत है। एक तो वो प्राइस, जो सप्लाई, हम लोग जो प्रोडक्ट सप्लाई करते हैं, सर्विसेज है, उसकी प्राइस वो लोग 50% से कम जाते हैं चाहते हैं, और पेमेंट टाइम पे नहीं देते। Sometimes, they reject our product, or they reject our consignment because of, they want to harass the companies. ऐसे बहुत सारे इश्यूज है, बहुत सारे इंडस्ट्रीज के प्रॉब्लम है। तो इसी को हम थोड़ा ट्रांसफॉर्मेशन इकोसिस्टम चेंज करने की कोशिश कर रहे हैं ऑन बिहाफ ऑफ चेंबर। सो लेट्स हैव वन इंट्रोडक्शन फ्रॉम द ईच पर्सन, सो दैट वी कैन अंडरस्टैंड देयर बैकग्राउंड, बिजनेस बैकग्राउंड, कंपनी का प्रोडक्ट क्या है, कितना आपका टर्नओवर है, और क्या आप चाहते हो, किस तरह। बहुत सारे एसएमईज को हमारे यहाँ पर देखा गया, अभी हमारे फ्रेंड बात कर रहे थे कि एक्सपोर्ट प्रमोशन, आज की डेट में मार्केट तो बहुत बड़ा है, बट सही मार्केट में सही कस्टमर को, सही पार्टनर को ढूंढने के लिए बहुत दिक्कत आती है। आज कोई एजेंट को अगर आप अपॉइंट करते हो, तो एजेंट 10 लोगों का एजेंट होता है, आपके काम पे कितना फोकस कर सकता है उसका भी है। तो ग्रुप मार्केटिंग इज ऑल्सो मोस्ट इंपॉर्टेंट नाउ। अगर आप एक सेक्टर से हो, तो सिमिलर सेक्टर से या उसके साथ में अटैचमेंट सेक्टर जो होता है, उसके हिसाब से अगर करते हो, तो मुझे लगता है बहुत सारा काम होता है। लेट्स स्टार्ट फ्रॉम यू।
Hello friends, my name is Dilip Chaudhary and I'm working for KGK Diamonds Eye Private Limited. I've been associated with this group since more than 15 years now. Basically, I take care of the finance leg there and basically arranging funds from the banks. That is my key role there, and I handle treasury also there. This program can be helpful for our customers wherein where we have a contractual agreement with them. So that could be a great help to us. Probably we will already have fixed up some meeting with UB Group person, Mr. Girish, on 28th. So
Okay.
we are planning to have a touch base on this thing.
So you are the experienced person because you're dealing with the lenders and you're dealing with the company. Yes.
A funding arrangement with a couple of bankers.
Okay. Thank you.
Oh,
Next. Yes, go ahead.
Good evening, everyone. I'm Naresh Khetania, CFO Godavari by Refineries. Our turnover is about 2,000 crores. We deal in chemicals, we deal in power generation and the ethanol and all these things. We have a working capital relationship with the banks, but definitely this type of solution whenever it is required, either by a MSME, of course, we have to give them we have already given the platform through RBI, RXLI, and of course, sometimes there is a need for advance and all. Definitely would like to take forward through UV Group. Thank you.
Okay. Another point, Mr. Jain must be mentioning that negotiations with the lenders, because most of the time you must be aware about it. Most of the time banks can dictate, XYZ amount, ये रेट में चाहिए तो लीजिए, नहीं तो चाहिए। उसके निगोशिएशंस करने की ताकत हमारे में जरूर चाहिए, बिकॉज बैंक्स पता है, बैंक को पता है कि ये कस्टमर है, ये जाना वाला है, ये जा सकता है। तो अगर आपने शुरू कर लिया नेगोशिएशन, डेफिनेटली दे विल। और एंटरप्रेन्योर्स तो हमारे एक्सपर्ट होते हैं नेगोशिएशन में, तो बट लेंडर के साथ कम पड़ते हैं। तो लेट्स हैव यूबी का एक इन्फ्लुएंशियल, जो मैंने कहा, उसका फायदा लेना बहुत जरूरी है। यस।
My name is Ajit Doshi. I'm representing two companies, incidentally. One is American Steels Private Limited, which is a Baroda-based company, essentially trading into steel and cement. Now, what I'm observing in our business is that the money flow, one is we have to pay money to our suppliers upfront, and then we give credit. And the construction industry, suppose if you take a project, somebody is building, say, 40-story building. As per the RERA restrictions, that company is allowed to take money from the customer only in 10 installments. Now, earlier the building used to be 10 floor or so, so every slab used to get money. Now our customer gets money after every three slabs. So his cash flow is not as fast as what it was normally when he was building a 10-story building. Everywhere in Pune, Bombay, buildings are 30, 40, 50 floors. So, I have seen cases recently. I've been traveling and meeting my customers all of them, we are refraining to trade with them because we are not sure when they say 30 days and then they make 45 days and 60 days and 90 days. And so we want to see if we can bring in UB for this to help us out of this situation where the customer is not able to pay. Within they commit on paper, but in reality, it doesn't happen. So we want to pass on that risk of the customer not able to pay to them, and at the same time, we will also see if we can use UB's platform to borrow for ourselves for our buying from our suppliers.
Okay.
That's one thing. I also work as a head of business development and strategy for a company called Metal Forge India, and we have some of the top corporates like BPCL, ISRO, etc. But there are corporates like even a company like Tata Projects. We had problems in getting the money. In pandemic time. So in such situations, we will tell them, okay, you route through this channel, and at least we will see to it that we get our money in time. And then their risk is minimized because they are dealing with the top corporate of India. So that kind of a thing. I'm just evaluating now as to how to make the best use of UB for our business.
Okay.
But this whole session by him and the earlier person and the presentations were very, very good. Thank you.
Thank you very much. Yes, please.
My name is Vihanga Pimbudkar. I represent Comnet Solutions Private Limited. I'm a part of, we are a IT company. Basically, we provide IT infrastructure for all of our customers. CDB and HDFC Bank is our core customers. Okay. So our motto is to, make your IT processes and business transactions very smoothly. So I manage the entire West region for providing IT infrastructure, not only infrastructure, but it's solutioning, it's a software, it's a, recently we have achieved one milestone in Goa. We have launched one application for Goa government, which is a taxi services. What we generally opt in Mumbai for Ola and Uber, because whenever you land in Goa, there is a problem of transport. Okay, you have to travel only 10 kilometers to your hotel, but you have to pay minimum 2,000 rupees. Earlier it was like that. So now with the help of government of Goa, we have launched one app, Taxi Goa Taxi it is, and you can definitely use this app when you are traveling to Goa. So this is our milestone. In Goa, we are doing 14,000 kilometers of fiber for entire smart city. We have done Pimpri Chinchwad, we have done Nashik. So again, from all the verticals, finance and diamond, manufacturing, everywhere, pharma, we have our footprints available. We operate in India, all the cities. At the same time, we are globally present in Australia. Thank you so much.
So every company require money, IT and market. Yes, next.
Hi, good evening, friends. This is Mihir Shah, and I am representing G1 Chemicals Private Limited. We are into chemical manufacturing, and I am from finance. And this event has definitely helped us out to know more new opportunities that can be grabbed in nearby future, and to know more opportunities to make new type of business opportunities also. Thank you.
Next.
So my name is Sasan Chandani. I'm representing Riverside Industries Limited. So we manufacture pigments, and basically our factory is in Maharashtra only. So the person that said like there are lots of problems we are facing in Maharashtra by other peoples also, like many problems regarding transport and all. So we will be looking forward having a problem. Thank you.
Yeah, hello. My name is Tushar Shende. I am representing Rama Cylinders. Our company is manufacturing cylinders. The turnover is about 500 crores, and I am a CFO of the company. Presently, we don't have immediate requirement of this, but this idea seems good, so I will have to explore it further.
Oh, thank you. There is one ecosystem from earlier. We used to, keep one family doctor, one advocate, and one is a consultant. So like that, we should, keep UB and our chamber like your consultant, your partner, because in midnight you should not, to find out someone कि अरे अभी किसी को बुला लो, तो हम बैठे हैं इसके लिए.
Hello, my name is Kush Jathalan. I represent the company Slim Lights Electricals Private Limited. We are into copper enameled wire manufacturing. We are based in Bombay itself and a factory in Daman. This is a very enlightening experience because we also have a lot of dealers in our business. So having something like dealer financing and dealer vendor options is a good idea, and we will be exploring that.
What is the turnover of your company?
300 plus.
Okay, good.
Yeah, my name is Bharat Jain. I'm representing here the company Europanel Products Limited. The company is into the manufacturing of ACP sheets and it is listed on the SME platform NSE. This is the only company of the ACP industry which is listed on the stock exchange. It got listed in December 21 and the turnover of our company is last year it's 330 crores.
So how's the response on SME stock exchange?
That's good.
Good. Okay.
So, but now they have extended the time period from SME to main board from 2 to 3 years.
3 years.
Yeah.
So you want to reduce that?
Yeah. 2 years are there.
So why don't you send me a request? I will ask SEBI to think about it.
Okay. Okay.
Because
Definitely.
of some issues, I know that.
Yeah.
It was discussed with us.
Yeah.
There is some issue because most of the companies are showcasing, they are making some like a balloon and then sometimes they face a problem. That's why. But you can send me your experience.
Yeah, I will definitely send you.
Thank you.
Yeah.
Next.
Hello, myself Sampath Budeka. I represent Mega Blast Group. We have two manufacturing facilities. One is in Khopoli, which is manufacturing of MS pipes, which is used for the water pipeline and gas pipeline and refineries. So there the turnover is around 700 crore rupees last year. And another company which is Mega Blast, there we manufacture geomembrane sheets and plastic bags. That company's turnover is around 300 crore rupees. We are right now only.
So, another company based in Gujarat?
That is based in Daman.
Daman, okay.
So we are, as of now, we are borrowing only for the purpose of working capital, and that too mainly only for the purpose of the non-fund based limits, which we require more in the Khopoli plant.
Okay.
Because we are supplying to the government, so for procurement of steel, we need to open LCs. We have interacted with the UB people also. We are exploring what best we can do.
And you are supplying to government department water to supply?
Yes. We supply to the
municipal corporation or state government?
Both. We are supplying through the contractors. We are not directly supplying. But wherever the government is directly, municipal corporation, we are not supplying. But where like GAIL, Gas Authority, and other refineries, there we supply directly.
Okay.
It is as per the tender requirement of the government.
Okay. Thank you.
Very much.
Hello, my name is Rakesh Devan. I am representing RW Solar India Private Limited. So it's a Germany-based company, and we are into solar EPC. So we set up power plants pan India. So till now we have done 1.5 gigawatt of projects. And as far as this UB platform is concerned, it's very innovative and very informative. So we mostly take our complete turnover is around 300 crores, and we mostly take the credit support from our parent company Germany. And here we face a lot of challenges in getting the bank guarantees and all, because in EPC business you have to give a lot of bank guarantees. 10% of the contract value you have to give bank guarantees. So getting the bank guarantees, giving collaterals and all, that's a bit challenging at times. And the interest rate also, like we are getting, if you get at 7%, that will be very nice. But most of the time, you'll not get at this rate. So overall, its concept is very good. Definitely, I'll put this before the management.
So you are expecting what is the rate of interest must be?
We are getting at 10 to 12% that level.
So every morning when I get up, I think that there is a news in newspaper that from tomorrow we'll get a loan at the rate of 3%.
Maybe big corporates are getting, Tatas and all those kind of big corporates, they are getting that rate, 7%.
Okay.
Yeah. So, but for the MSME companies and all, it's very difficult to get at this rate.
Okay.
Yeah. Thank you.
Thank you.
Good evening. Myself Dinesh Kumar, representing TechFab India Limited. We have 5 manufacturing facilities in Daman and Silvassa, one in Haridwar. We are mainly manufacturing for geosynthetic material. This is mainly used for the constructions and dam construction, road construction, railways and all. So this event mainly I am looking for the supply chain solutions which has this is about. Nowadays, anyway, the getting market money from the market is difficult one. We are doing bill discounting and all. Now definitely we will look for this and we'll discuss with the management and will yeah.
What is the turnover of your company?
It's 400 and up this year.
400. Okay.
Yeah.
Thank you. Next.
This is Omar. I am representing Soy Explorer. It's a floriculture based company. We were before COVID totally focused on export oriented. But with COVID pandemic, we ventured into the local market because it was a need of an hour, and we got an opportunity for exploring it. And there, because this is a family-based oriented company, and we didn't feel any need of any external funding and all. But with the local market venture, we have come across many scenes, many situations where we'll be putting across UB as a partner for many of our customers. Till now, for us, we are not in a situation of taking any finance and all those things. But yes, we do can propose this as a partner to many of our customers.
What is the turnover of your company?
It's around like it's a diversified group. If I'm talking about Soul Explorer, it's around 900 crores.
900 crores. Okay. Thank you. Next.
Good evening, everyone. My name is Mujib, and I'm representing Sopariwala Group. We are exporter of leaf tobacco from India, and we are having many businesses. One of the businesses like Source Flora is our group company. We are into perfumes. We are into many businesses. To be very honest, we have never explored and never taken credit till now. But there are certain SMEs and MSC in our portfolio which is getting stuck because of finance or because of some supply chain issues. That's the reason I'm here to explore more about it.
Good.
Thank you.
Thank you. Last one. You missed, yes. You are gone backside, so that's why.
Yeah. So my name is Hitesh Dhanuka. I represent a realty division of company called as KGK. KGK is a group which is a multi-faceted business group. They have a real estate division.
KGK.
KGK.
Not KGB, no?
No. KGB is from Russia and they are into spy and investigation. We are dealing in Russian diamonds and all those things. We are dealing with Russia.
Okay.
So my company, why I am here is that one of my colleagues, Dilip, is into the diamond and jewelry part of our group. So we have started a new business in real estate that for last 3 years we started taking over the companies who are part of NCLT. The real estate companies who are going bankrupt and getting listed into the NCLT. So we have taken over two big projects in India right now. One was called as Sare Homes in Delhi. It was taken over by us for 990 crores. And we are bidding for 6 more. So what happens is that when you are taking over company from an NCLT, the whole deal is a very different scenario. It's a court operated scenario and the financing becomes very difficult and very different. So I just wanted to, get an understanding of that if that's a possibility of challenging to UB that financing the companies takeover in IBC is possible.
So what is your experience with the other lenders?
So what happens is, Salungi Saab, that what the normal banker, he'll not understand what I'm trying to say or what I'm pitching for. Because then what happens is that there are lots of creditors, lots of banks. We are making them to take a haircut of say 75% and then 25% will come to us. Now that company will come over a period of time to us. We need to pay 95 crore rupees to the FCs right now. After 3 months, 100 crore rupees, the company will come to me. So there's a part when it's unsecured, there's a part when it's secured. But this has to be structured in a very different manner. You have, I think, Jain sir has put it a logo of Kotak Bank on their last site of the customers. So right now, one of my project of NCLT TICO is funded by Kotak, but then Kotak Bank is not able to fund me. There are a company called as KIML, Kotak Investment Management Limited. So my funding is getting funded by KIML, though it's a Kotak Bank fund, but not the banking channel.
The cost of that funding also may be high.
The cost of funding is not that high, to be very honest, because it depends upon the rating of the group and the credibility of the group who is taking over the NCLT part. But then, yeah, my expectation and the rate I'm getting is there a difference between the two.
So you want to say that NCLT cases, whatever you are buying from market, they are not getting funding from the lenders particularly. on the.
So I'm not buying from the market, to be very honest.
Acquiring.
I'm acquiring via the legal process of NCLT. So what happens is that the credit part is not that easy to arrange in India right now, because NCLT is a new law in India. IBC is a new law. It's getting evolved. The sections are not clear. The laws are not clear that much.
Your background is a finance.
So I'm a chartered accountant of 2002
Then I
batch.
suggest you give me a note on this. What we can do, we can inform the IBBC, IBBI, and also RBI, because say for example XYZ company is in a difficult and they have gone on the NCLT. So ultimately, the employment generated by that company should not come on the road.
Yes.
And that company should continue.
Yes.
So therefore, we can give suggestions.
Yeah, we can always give. I'll put a note to you.
Ministry also.
I'll put a note to you, because what happens is that the companies that we take over, say for example X company, I'm taking over in Delhi right now. I'm going to deliver 1200 flats in next 3 months to people who are stuck in that project for last 12 years.
Yes, that's
so 1200 home buyers will be relieved in next 3 months. They were stuck for last 12 years, and they will not get escalation price, no nothing. They will get their price at the originally agreed price, at the originally agreed amenities. Nothing will be compromised for them. The haircut will be taken by the lenders, not by the home buyers. So
okay,
I'll put a note to you, no issues about
please.
that.
Mahesh, and Chashi are touch Madhura. Okay, good. So any question to Mr. Jain? After hearing, you want to say something? Yes, please.
Every morning I get up and I think about today I read in the newspaper that lending rates and all will be 3%.
Came down, हाँ.
ये आप उठने से पहले देखते हो कि
नहीं, उठने के बाद देखता हूँ.
सोने के बाद?
नहीं, उठने के बाद देखता हूँ कि कोई पेपर में ऐसी न्यूज तो नहीं आई है. अभी तो उठने के बाद देखता, सोने के बाद है नहीं, उठने के बाद देखता हूँ. और that's why I am representing you ना. तो वो वही देख रहा हूँ रोज की कब होगा. तो अब ये मोदी जी से मिल रहा हूँ मैं 2-3 महीने में, तो उनसे मैं जरूर इंसिस्ट करूंगा. यस, लेट्स प्रे टू द गॉड. और जैसे आपके जैसे सीए वो कुछ अगर अच्छा मॉडल बना के देते, अच्छा सजेशन देते, तो we should focus that. Otherwise you will surprise to note that RBI is also not keen to come down rate wise. मुझे लगता है हमारा आरबीआई का या हमारे बैंकिंग सेक्टर का देख के वर्ल्ड में रेट्स बढ़ते जा रहे हैं. बराबर है जैन साहब. तो यूएस में, इवन जापान में, if you want to put money in a bank, you have to pay for a charges for that. So similarly, Japanese banks are also coming in India, particularly to lend, but वो भी बहुत क्रीम कस्टमर देखते हैं. 40% ग्रोथ वाली कंपनियां देखते हैं. इक्विटी में अगर जाओ तो भी सेम मैटर है. So anyway, so it's nice to interact with you, and good the small group and small interaction, and very knowledgeable information I received from you, because most of the companies those are participating here, we are not understanding their background. So that's why credibility and credit worthiness we have to improve. Okay, so thank you very much, and let's join for a dinner. Sakshi ji kahan gaye? Any instruction, or we can join for dinner, networking dinner. Thank you very much. Thank you, UB. So you will be our banking service influencer from today. Thank you very much.